Welcome back to the channel, folks. This is Jason, host of Fighting Words Financial, and today I wanted to talk to you guys about two different SPACs that I'm keeping an eye on right now. If you guys are first time to the channel, please hit the like button and the subscribe button. It does help me out with the YouTube algorithm. Also, if you've been watching my channel for a while and you want to join our growing community of Patreons, I've left a link in the description below and in the comments, and I'd love to hear from you guys in our Discord chat. But anyway, today I wanted to talk to you about Churchill Capital 4 that's merging with Lucid Motors, and I want to talk to you about another company that is really probably, I think, going to be one of my favorite SPACs this year. I'm not a huge SPAC guy, all right? I think that there's more risk in a lot of these than there's going to be reward in the future, and I think that there's going to be a lot of investor disappointment. But the SPAC that I'm going to talk about in the second half of this video, IPOE, that's going to be merging with SoFi, I really think that that's going to be the #1 SPAC this year in terms of growth, and I think that in terms of future valuation, it's actually one of the most attractive new investments that's going to be out there. But let's talk about Lucid Motors first. Lucid Motors just announced that they have reached an agreement with Churchill Capital to go public, and of course that caused an immediate decline in price. I think, of course, there was just a lot of selling on the news. I think when you look at the run-up in stock price at a company that was pre-IPO, or at least pre-merger here, I think that it kind of makes sense that a lot of people sold on the news. I think it got close to, $58, $59 a share before it cratered, and right now as I'm making this video, it's sub $30 a share. That's actually approaching a price where I would consider taking a speculative risk on this stock. And listen very carefully to my words here. Speculative risk on this stock. Okay, so apparently I can't speak today, and I keep stuttering. And normally when I do that, I would probably do 10 or 15 different takes of this video, but I don't have as much time to make this video today, so I'm going to continue without doing a ton of editing. Anyway, it's approaching a price where I would take a speculative risk on this, and it is certainly a speculative risk. I don't look at Lucid Air right now as necessarily an investment because, number one, they're pre-revenue. And while that's not always a giant challenge when it comes to evaluating a SPAC, in this case, it really is. And I'll tell you why. They have enormous challenges in front of them. They're following a model that Tesla kind of laid out. They're not really doing much different than Tesla did. They're starting off creating that necessarily very expensive vehicle out there to fund future operations and move down the manufacturing value chain into volume production, right? So they're starting off with a Model S competitor rather than like a Tesla Roadster competitor, but they're not really doing anything differently than Tesla. They do have a little bit more in the way of financial backing from big players outside of the United States, a little bit more backing from institutional players than Tesla did. So I'm actually pretty excited about that. But they still have to work their way down that value chain into volume production. I don't think that anyone is really unhappy with the idea that Tesla is going to have competition in this space. I think that everyone knows that competition just leads to better products for everyone. The lack of competition is kind of what destroyed the U.S. auto industry in the 60s and 70s, and we saw manufacturing quality decline because they were essentially too big to fail at that point. I don't ever want Tesla to get to that point where they're too big to fail. I want them to have competition and to continually improve their products. And I think that Lucid Air could help them do that. But here's the problem that Lucid Air faces. They don't just face competition from Tesla. So the Lucid Air really is a true competitor to the Model S. It really has many of the same features. You can compare them side by side. The Model S beats the Lucid Air in a few areas. The Lucid Air, at least on paper, beats the Model S in a couple of areas. And in terms of luxury, in terms of price, it's really there. But in order to be successful as a company, they have to get away from producing that necessarily expensive vehicle in that high-end space and move down the value chain into volume production. That's how this company is going to be successful. That's how every auto company is going to be successful, with the exception of a couple of luxury brands like Lamborghini or something like that. The problem is that Lucid faces a huge challenge that Tesla never had to. So not only is Lucid going to be competing against Tesla as they move down into that value chain into volume production, they're also going to be competing against now all of these legacy automakers that are getting into electric vehicle production. I'm talking about the Fords, the GMs, the VWs, and others like them. Now, I'm cautiously optimistic about the chances of Lucid Air for a couple of different reasons. Number one, I think that their Model S competitor might actually do just fine. As someone in my Patreon group pointed out, in in one of the Zoom calls that we had, he lives right in the middle of Grand Central Station for EVs, or Ground Zero for EVs. He lives in Silicon Valley. And every time he turns his head, he sees someone with a Model 3, someone with a Model S, or someone with a Model X, whatever it is. There's tons of them in Silicon Valley. And he knows darn well, and so do I, because I am this person, I am a contrarian. If everyone else has a Tesla, there's going to be a market, and a relatively sizable market of people that just say, I want something different. And they're going to take a look at the Lucid Air. Now, I don't particularly think that the Lucid Air is a great looking vehicle, but my personal opinion on the aesthetics don't really matter. I realize that there's a whole market of people out there that will find that vehicle attractive and that will like it, sometimes just from a contrarian perspective. What I'm saying, though, is the challenge that they have for moving from that expensive vehicle down market into that middle tier is they're going to face competition from the likes of GM, Ford, VW, and all these others. And the advantage that GM, Ford, and VW and all these others have is that they can lose money for a long, long time in order to spin up their operations in the EV space. And I think that's what they're planning to do, is they're basically going to sacrifice some of their internal combustion engine vehicle line in order to fund their electric vehicle operations. They realize at this point that they are pretty far behind the technology curve when it comes to Tesla, and pretty far behind technology even when it comes to a bunch of startups that aren't in the production stage. I can see some of them acquiring smaller players in this space, but I can also see the GMs, the Fords, and the VWs are going to end up crushing a lot of these companies that went public via SPAC in the last 6 months or so. Now, I'm cautiously optimistic about Lucid. I think that they've got a chance to make it down that value chain into volume production and a chance to survive. And I want to see them succeed, but I think they're a half a decade away from profitability. I think that if I made an investment today in Lucid Air, it's generally just a speculative investment, not really a real investment where I expect a sort of linear return over time, where I have revenues that I can count on. I have an idea what their plans are for expansion. I know how much they're putting into capital, capital expenditures. I don't really have any idea of that right now because they aren't public at this point. I want them to be successful. Like, I want to see this transfer of wealth from older, less dynamic companies to these newer and more dynamic players. That's the kind of economy that I want to see. I'm not sure that Lucid Air can make it, so to me, I'm kind of up in the air on this one. Anyway, so let's talk about SoFi now merging with IPOE. This is one of Chamath Palihapitiya's, God, I hope I pronounced that, Palihapitiya's SPACs. Guys, I'm pretty excited about this one, and I need to disclose that I do own quite a few shares of this, and I have been acquiring since early January, and since right before they announced that they were going to merge, and some rumors came out, I started acquiring, and that's the reason I didn't make a video on this. I'm trying not to make videos on stocks either 5 days before or 5 days after I buy into the stock. All right. I don't want to be accused of trying to manipulate the value of the stock, so I'll do a video after that. Not that I think that me and my 15,000 subscribers are going to be able to manipulate the value of a $8 billion company, but I just want to remain like ethically clear here. Like, this is what I'm doing from now on, is I'm not buying or selling a stock within 5 days of me making a video. And SoFi is really just the first one of those. So if you don't know about SoFi, I'm going to be doing a more technical deep dive on SoFi here in the near future. But the company is called Social Financial, and right now a lot of younger people are focused on their app, and I've heard a lot of criticism. They're like, oh, well, Robinhood is so much better as a trading app, or Webull is better as a trading app, which, by the way, there's a Webull link in the description. You guys can check that out too. But that is not where they make most of their money. SoFi, Social Financial, makes most of their money primarily as a lending platform. They've done a lot to simplify and make more transparent the lending process. So I've been buying and selling real estate for quite a long time, and buying and selling other assets for quite a long time. And a lot of times it involves loans. Sometimes the loans are longer term, sometimes the loans are shorter term. But I have to tell you that ever since the Great Recession of 2008, 2009, going through the process of getting a loan has actually been really painful in terms of its invasiveness, how complex it is, how many times companies ask for the same material over and over and over, and that's mainly going through traditional lenders and traditional banks. So if I just really sort of simplified this process, and like I said, I'll make a more technical video on this, but the loan process in the loan process in the banking industry is really a mess. It's surprisingly mostly analog, and needs updating. That process has been simplified for people on the lower tier of loans, for like your peer-to-peer lending. It's been simplified on the upper tier of loans. There's this whole middle tier that wants simplicity and transparency and to be able to do things online with very little documentation other than it needs to be sent by emails and very little in-person signatures. There's this whole addressable market out there that needs to be captured, and SoFi is looking to do that. Now, they're valued right now at about $8.5 billion. And I'm going to say that I think that's a rather conservative estimation of their actual value. This is a company that's actually expecting to be profitable in 2021. How many SPACs that have emerged recently can you really say with a straight face that are going to be profitable even within the next half decade? And SoFi is expecting to be profitable, this year just on the strength of their lending operations. And other things like their trading app is just getting visibility and really just getting started. And it's really starting to sort of expand and take some of that market share, especially away from Robinhood after the GameStop debacle. So the other thing is they have applied for a banking charter, which is going to streamline their loan operations and actually allow them to make a lot more profit. Instead of sourcing money for loans and storing money for loans with third-party vendors, they're actually going to be able to do this themselves once they have a banking charter. This projection of revenues from their banking operations was not even put into their projections of profitability in 2021. So it's really just icing on the cake if they actually get approved for their banking charter. For a couple of different reasons, guys, I think this is going to be one of the best opportunities in 2021, and this is going to be one of the most powerful companies in the fintech revolution that we kind of find ourselves in right now. I'm going to be doing a more technical deep dive into this company in a later video. But anyway, guys, this is just, I just wanted to talk about a couple of SPACs that I'm looking at right now. One that I'm cautiously optimistic about, which is Lucid Air. And the other one that I'm pretty enthusiastic about, but I do own a bunch of shares in IPOE. Or Social Financial. And so take that, of course, with a grain of salt. None of what I said here is, of course, instructions to buy, sell, or hold a security. It's just for entertainment purposes. Anyway, folks, let me know what you think in the comments below. Let me know how wrong you think I am. I look forward to hearing from you. Thank you very much, and I'll see you next time.